The AI models are screaming buy while everyone else is running scared from XRP. Let's break it down. Here's where we are right now. XRP is sitting at $1.12, down 3.18% in the last 24 hours. Now, I know that doesn't sound exciting, but you know what I've noticed? Sometimes the best opportunities come disguised as boring red days. We bounced between $1.16 at the high and $1.10 at the low, with about 69 million XRP changing hands. The thing that caught my eye, though, we're trading a whopping 22% below that 200-day moving average at $1.47. That's either really bad news or really good buying territory. Here's why this number matters. The RSI is chilling at 52, right in that neutral zone. Not oversold, not overbought, just hanging out. But wait, here's the interesting part. The MACD is still negative, but that histogram just flipped positive at 0.0167. In plain English, the momentum might be shifting even though the price hasn't caught up yet. We're also trading above the middle Bollinger Band, which tells me we're not in complete freefall mode. The moving averages are still acting like grumpy gatekeepers though, with price sitting below all the major ones. So what's moving the market today? Well, it's all about that dollar strength, honey. The DXY is flexing at $100.86, and XRP has this nasty habit of doing the opposite of what the dollar does. We're seeing a strong negative 72% correlation there. Plus, when the S&P and NASDAQ get cranky, XRP tends to follow suit with those negative correlations around 80%. It's like XRP is the moody teenager that copies whatever the popular kids are doing. On the regulatory front, here's the thing. We don't have any major bombshells today, but those XRP ETFs are quietly doing their job. They've pulled in $21.9 million in net inflows, and that's not pocket change. When institutions are putting their money where their mouth is, even during red days, that tells me something important about long-term confidence. The mood right now is, well, let's just say it's not great. The Fear and Greed Index is sitting at 27, which screams extreme fear. Now, as your friendly neighborhood chart watcher, I've learned that extreme fear can actually be a good thing for contrarian investors. When everyone's scared, that's often when the smart money starts accumulating. XRP is basically moving in lockstep with Bitcoin and Ethereum right now, with correlations above 95%. The big players are doing something interesting. We've got 792 whale transactions moving over 1 billion XRP. That's not normal retail activity, folks. These whales are representing the majority of all trading volume, which means the big money is actively making moves. Whether they're buying or selling, well, that's the million-dollar question. In plain English, we're at this stage. Elliott Wave theory says we're in that dreaded C-wave correction. Think of it like the final ugh before things get better. The Wyckoff analysis is showing accumulation phase B, but with only 36% confidence. Basically, the market is trying to figure out if it's done falling or not. It's like watching paint dry, but with money involved. So what does the AI think? This is where it gets spicy. The AI ensemble is practically jumping up and down with excitement. One-day prediction, $1.61. with 97.5% upward probability. 7-day target, $1.55 with 98.5% confidence. 30-day outlook, $1.55 with 87% probability. We're talking about potential gains of 38% to 44% from current levels. Now, I'm not saying the AI is always right, but those are some pretty confident numbers. But here's what could go wrong. That 22% gap below the 200-day moving average isn't just a number, it's a red flag waving in the wind. If traditional markets keep tanking, XRP could get dragged down with them thanks to those high correlations. And let's be honest, when whales control most of the trading volume, we're all just along for their ride. Here's my take. I'm leaning toward a limited buy using dollar cost averaging. The AI predictions are too strong to ignore, and that extreme fear sentiment usually marks good entry points. Entry zone, $1.10 to $1.12, with a backup plan at $1.05 to $1.08 if we dip further. Stop loss at $1 because, well, nobody likes losing money unnecessarily. First target, $1.35 for the conservative folks. Second target, $1.55 for those feeling adventurous. This isn't financial advice, just me sharing what I see in the AI data. That's it for today. If this helped you make sense of all the chaos, hit that subscribe button and give it a like. I will have fresh predictions tomorrow, so I'll see you next time.